Hello and welcome to this Friday edition of FreightWaves Now. I'm your host Anthony Smith, and coming up we have a DHL Supply Chain Pricing Power Index update with Kevin Hill. But first we're going to go to Zach Strickland with the Carrier Update brought to you by PowerFleet. Stay tuned.
Hey everyone, and welcome to your Friday Carrier Update presented by PowerFleet. I'm Zach Strickland, and we are going to finally see the first dip in the tender rejection rate after the Labor Day holiday for the first time. Not a strong one, however, 0.12 or 12 basis points down day over day. Not a significant change by whatsoever, but it is important to note that, you know, as we are looking at the freight market and we are trying to figure out, are we going back to seasonality? Are we coming back to a sense of normality, or normalcy, I should say? You know, when these happen, it is important to kind of take note and say, okay, maybe things are starting to return to you know, where they were before, but not so fast. It's just one day. 26.56 tender rejection rate for the United States is still a tremendously high number for tender rejections. Capacity is not coming flooding back to the market by any means, is all that's telling me. And it's going to take a little while based on the volumes and the stuff that we have been seeing coming through the market so far. And again, everybody should be watching their ocean data, you know, especially the sonar users out there, looking for that ocean data to see if there's any sort of slowing in import volumes, because that's been one of the key factors of what's been driving a lot of the freight market volumes here over the last several months at that. So going into the regions, so this is something I wanted to highlight today because we are seeing a definite shift in terms of capacity coverage. So looking at most of the last couple of months, we've been talking a lot about Ontario, Los Angeles, which are down there in the Southern California corridor. We've seen that start to kind of level out, and I've got this broken out by regions here, and you can see over there in the West region with California, Nevada, and Arizona in that lighter blue, it's actually kind of flatlining right now. If you look at the West Coast in that blue line there, you can see here over the last probably 2 weeks, since about August 21st or so, we're seeing a trend of a horizontal trend. And that's almost, it almost looks like carriers have figured out, okay, hey, we need to go and service the West Coast as much as possible in order to make sure that we're getting that high dollar amount of freight. And what's happened, though, is that the East Coast has now been left wide open and abandoned, or at least the northeastern corridor. If you look over there on the East Coast from about Virginia north into Maine, that is our northeastern region that I have highlighted here, and that is in this pink line right there, and it has now overtaken the rest of the country for the highest tender rejection rates in the United States right now, just over 27% rejection rate. So the northeastern corridor, highly exposed. Again, if you give a carrier the option between northeastern corridor and the West Coast, Southern California during this time of year, it's going to be the West Coast more often than not. The rest of the country is kind of middling around. We've got the Northwest, which did have a really strong upward tick at the beginning of August, kind of settled down a little bit to end the month, and is now starting to kind of slowly trim back up. And that's the only other region that's showing a significant sign of increasing rejection rates, but it's still not necessarily as strong as it was back in August. So looking at the most volatile markets in the country, you can see over there on the East Coast, most of those are happening on the East right now. And those green lines, a lot of tender rejection rates increasing, and a lot of those smaller markets, we were talking about this yesterday on the midday market update, a lot of the small markets are getting really exposed and abandoned right now. We'll talk about one of those here in a minute, especially in the Northeast, where we're seeing a lot of carriers really try to, you know, they don't really necessarily want to be stuck in that corridor. A lot of that short haul freight keeps them stuck in that area. They try to get some of that longer haul, mid-haul freight that brings them out, consistent routes, etc. Strong increase in Charleston, West Virginia, Boston, Massachusetts, Springfield, Massachusetts, Hartford, Connecticut, all leading the pace or setting the pace for the Northeast being one of the tighter regions of the United States right now. You know, and that will probably continue for the time being as long as those volumes are coming off the West Coast in the way that they are. Highlighting Springfield, Massachusetts, you can see over the last couple of days, especially since Labor Day, tender rejection rates shooting up significantly, all the way up to 27%. A lot of, you know, reefer, not so much an item up there, but the van tender rejection rates, of course, driving a lot of that. Tweener rejection rates, of all things, out of Springfield, Massachusetts, leading the way. So if you are up there, you do have a good chance of getting out of that market with those loads over 450 miles, and that'll do it for today's Carrier Update.
The comprehensive logistics offerings from PowerFleet cover in-cab ELD, fleet management, trailer tracking, cargo monitoring, and tracking other assets such as chassis and intermodal containers. Power up your operations with PowerFleet.
Welcome to the DHL Supply Chain Pricing Power Index Update. I'm here with Kevin Hill. Kevin, what's the latest?
The latest is 85. We've been stuck at 85 for 3 weeks. I don't know if the proper word is stuck, because 85 is a very high number, especially for carriers, because as closer you get to 100, the carriers have the pricing power. The closer you get to 0, the shippers do. We were back around 10 or 15 in early April, mid-April, and we have swung the balance of power. As you know, we talk about it every day here at FreightWaves. O-Tri is north of 25%, so 1 out of every 4 loads or contracted tender loads are being rejected. So it's a strong point for the carrier. We're going through Labor Day weekend, so we need to clear out before we really gauge what's going to be happening the rest of September, but we'll keep a close eye on it.
So, as you mentioned, 85, it's been there, stuck there for quite some time. So what are some of the things that you mentioned that are propping up this such high level for the carriers?
I think historic outbound tender load volumes, or at least tenders, they've been rejected 1 out of every 4. There's a lot of consumer spending going along. As you know, Anthony, being the lead economist here, consumers are really hyperactive right now. They've taken a lot of cash for travel and vacations, hotels, dining out, and converted that into home improvement, e-commerce, electronics. We're about to see product launch season come in, and we're gearing up again for the holiday season. Thanksgiving and Christmas are just right around the corner. So we'll see what kind of dip we see before that normal seasonal pattern. But if we stay strong throughout that, it's going to creep up a little bit more. I think our 3-month outlook has been 75 for the last few weeks too. We're bumping that up to 80 this week. We see a lot of really positive news. Jobless claims came out today, or yesterday, I should say, initial jobless claims. And it seems it's leveling out a little bit. So there's really good news in the economy right now.
Right, as you mentioned, a lot of good news in the economy, and a lot of good news are tightening, depending on which side you're on within the freight industry. Conversations with Zach Rogers, the heading up of the LMI, the Logistics Managers Index, telling us that trucking prices have gone through the roof. When we're looking at transportation prices, we're looking at driver capacity very tight, and we're looking at warehousing. People are struggling to find warehousing space. Inventory levels are high, especially downstream further to the consumers, as you mentioned.
Yeah, especially on the rate side. Contract rates are now we're starting to hear everything about mini bids. Into this new bid season that we're rolling into, we're going to see contract hikes. We've seen spot market prices, I think on our truckload indexes that we have in Sonar, up about 33% so far off the low. So going into bid season, going into those new contract negotiations, we're going to see those contract pricing. Maybe, I don't know if it'll be double digits or not, like in late 2017, early 2018, but it's going to be pretty strong price increases as we move forward into the holiday quarter. And as you said, warehousing is tight right now.
Right, and last thing, you mentioned we're already in September. Crazy to think that we only have 3 months left in the year, so it seems like this is going to get propped up potentially throughout the rest of the year. What are some potential headwinds that might get in the way of that?
I think potential headwinds are, election cycles. Everyone says that you have a depressed economy in election cycles. I don't know if I buy that or not. But of course, the health, coronavirus, any things that might happen outside of that. But I think the recovery is going pretty well right now, and especially for tangible goods. Tangible goods are in high demand. So I can't really think of any notable headwinds that might be out there right now. But check with me next week. I might have a few.
We appreciate it, Kevin Hill. Thank you so much for that update, and thank you so much for tuning in. That's going to do for this DHL Supply Chain Pricing Power Index update. Be sure to tune in next week for all the latest. That's going to do for this Friday edition of FreightWaves Now. As always, you can check out our FreightWaves TV app on all your favorite streaming platforms. Thanks so much for tuning in, and we'll see you on the next episode.